single day. I'm gonna make something great. That's my way.
Hi everybody. I am Ginger Wolf and welcome Stripped Finance. This video is for informational and entertainment purposes only. I am a feature entertainer and stripper, not a financial consultant. Please speak to your financial advisor about any financial matters. And with that out of the way, let's get into the video.
What are savings? Savings refers to the money that a person has left over after they subtract out their consumer spending from their disposable income over a given time period. Savings, therefore, represents a net surplus of funds for an individual or household after all expenses and obligations have been paid. Savings are kept in the form of cash or cash equivalents, for example as bank deposits, which are exposed to no risk of loss but also come with correspondingly minimal returns. Savings can be grown through investing, which requires that the money be put at risk, however. Understanding savings. Savings comprise the amount of money left over after spending. People may save for life goals such as retirement, a child's college education, the down payment for a home or car, a vacation, or several other examples. Savings may commonly be earmarked for emergencies. For example, Sasha's monthly paycheck is $5,000. Expenses include a $1,300 rent payment, a $450 car payment, a $500 loan payment, a $300 credit card payment, $250 for groceries, $75 for utilities, $75 for cell phone, and $100 for gas. Since Sasha's monthly income is $5,000 and monthly expenses are $3,050, there is $1,950 left over as savings. If Sasha maintains this savings and later faces an emergency, there will be some money to live on while resolving the issue. If one is unable to maintain savings, they may be said to be living paycheck to paycheck. If such a person experiences an emergency, there is often not enough money saved up to live on and they may fall into debt or bankruptcy. Types of savings accounts. There are different types of savings accounts offered by banks that come with different features or limitations. Note that all bank savings vehicles come with Federal Deposit Insurance Corporation, FDIC, of up to $250,000 per depositor per institution. Savings accounts. A savings account pays interest on cash not needed for daily expenses but available for an emergency. Deposits and withdrawals are made online, by phone, mail, or at a physical bank branch or ATM. Interest rates on savings accounts tend to be low but are often higher than on checking accounts. The best savings accounts can usually be found online because they'll pay a higher interest rate. Online-only accounts may be examples of high-yield savings accounts, which can offer as much as 20 to 25 times higher interest on deposits than the national average. Checking accounts. A checking account offers the ability to write checks or use debit cards that draw from your account. A checking account pays lower interest rates than other bank accounts, and many of them credit no interest at all to checking customers. In return, however, account holders get highly liquid and accessible funds often with low or no monthly fees. Money market accounts. A money market account, MMA, is an interest-bearing account at a bank or credit union, not to be confused with a money market fund. MMAs often pay a higher interest rate than regular passbook savings accounts and also include check writing and debit card privileges. These also can come with restrictions that make them less flexible than a regular checking account. Certificates of deposit, CDs. A certificate of deposit, CD, limits access to cash for a certain period in exchange for a higher interest rate. Deposit terms range from 3 months to 5 years, the longer the term, the higher the interest rate. CDs have early withdrawal penalties that can erase interest earned, so it is best to keep the money in the CD for the entire term. Shopping around for the best CD rate is critical if you want to maximize your investment. How to calculate your savings rate. One savings rate is the percentage of disposable personal income that is kept rather than spent on consumption or obligations. Say that your net income is $25,000 a year after taxes, i.e., your disposable income, and over the course of the year you also spend $24,000 in consumption, bills, and other expenditures. Your total savings are $1,000. Dividing savings by disposable income yields a savings rate of 4%. Savings versus investing. People sometimes use the words savings and investing interchangeable, for instance saving for retirement in a 401k plan, but this usage is technically incorrect. Retirement saving is more accurately investing, since money put away in these accounts is used to purchase securities such as stocks, bonds, and mutual funds. When money is invested, it is at risk of loss, but that risk is offset by positive expected returns over time. Savings, in contrast, are by definition safe from any potential loss. Additionally, savings are highly liquid and available for immediate use, for example using a debit card to make a purchase. Investments, on the other hand, must first be sold into usable cash. This can take some time and you may incur transaction costs. Investments, by definition, entail some sort of long-term time horizon to allow the money to grow and appreciate. How much will $1,000 in savings grow in a year? It depends where you keep the savings. If it is literally under the mattress, you'll have exactly $1,000 a year from now, and it may be worth less due to inflation. If you put your money into a high-yield savings account, currently paying around 0.87% annually as of May 2022, you'd earn $8.70 after 12 months. A 1-year 400 may pay slightly more, say 0.96%, but your money will also be locked up for the entire 12 months, after which time you'd earn $9.60. How can I save $1,000 fast? The best way to increase savings is to cut down on costs. Keeping a budget and not spending loosely can help. If you spend $6 on a fancy coffee every morning before work, for example, you can buy a cheaper $1 cup of Joe instead. Say you work 200 days out of the year, you've just saved $1,000. I am Ginger Wolf. This has been another episode of Stripped Finance. I would like to thank you all for watching this video. Please remember to like, comment, share, subscribe and press the bell icon to be alerted each time I upload a new video. I try to upload daily. So until tomorrow, keep shaking your assets. I love you all.
Hi guys, I'm Ginger Wolf and thank you for making it this far into the video. If you have the time, don't forget to like, comment, share, and subscribe, and I'll see you next time on Stripped Finance. So, in the meantime, I believe in you. I know you can do it. Just keep on grinding, okay?